The financial watchdog, the Financial Services Authority, has launched an inquiry into how the insurance industry sells around £11 billion worth of pensions every year to 400,000 people approaching retirement. Many could be losing thousands of pounds a year for the rest of their life by being misguided into buying the wrong product called an annuity. And this week, the Financial Services Authority said it would investigate just how much was being lost and if insurers were in fact discouraging customers from looking at the open market as they're entitled to do. Ros Altmann is a pensions expert and former government advisor. Indeed, she advised the government that the annuity market needed reform as long ago as 1999. So did she welcome this review?
What the FSA say they will be looking at is whether the open market option is working properly and trying to ensure that people shop around for a better rate. Now, as far as it goes, that may help some people, but it will only make sure they get a better rate for the wrong annuity. It won't make sure they get the right annuity at a good rate.
What different annuities are there? Surely the rate is what matters.
If you, for example, have a partner, for example, if a husband has saved all his life in a pension fund and then buys a single life annuity, which is the standard annuity, as soon as he passes away, there is nothing left for his wife. Other types of annuities would also be ones that recognise if you have a health issue, even if it's just, a bit of high blood pressure, or that you're taking statins, or perhaps you've had a heart attack in the past but you're fine now, you would automatically normally qualify for a much better rate, but from what's called an impaired life annuity or an enhanced annuity.
Why do you think the FSA isn't looking at this bigger picture and is just looking at basically the individual, from what I can see, shopping around on a website and making their own choice?
What the regulator seems to have always felt is that buying an annuity is a no-risk purchase. Once you've locked into the annuity, you're guaranteed for life, and they don't seem to recognise that actually this is people's whole life savings in many cases, and buying the wrong kind of annuity or getting a very poor rate could be an enormously, hugely risky thing to do. It's not no risk at all. It could be that there has been significant industry pressure, and of course, this is a very profitable product for many of those who are selling annuities, and the consumer doesn't have a very loud voice.
There are some changes, though, aren't there? The Code of Practice by the Association of British Insurers begins on the 1st of March. What difference will that make?
I think I would still be concerned that, in fact, the pricing of annuities is very opaque. Most people don't really know how to compare prices. And the risk, of course, is that because there aren't huge numbers of providers of annuities, the ABI's proposal that companies should produce indicative rates over time, all the time, could actually end up leading to the ability for them to collude to make prices worse. And I would rather see this code of practice focus on mystery shopping, so that actually every month you get real live quotes, so that the company doesn't know whether you are a real customer or not.
Ros Altmann, and that review will take another year before it reports. Meanwhile, always get a